Let me introduce myself first. I consider myself to be one of the lucky ones in life kasi pagkapanganak ko pa lang, meron na agad akong bilyones. Ako pala si JP Bilyones, a Business Development Officer for the Mindanao Desk of First Metro Securities, the stock brokerage house of the Metro Bank Group. I used to have an above-average paying job but did not save money and was even drowning in debt. However, other people didn't seem to have any problem when it comes to handling their finances. So I asked myself, ano bang ginagawa ng mga taong may pera na hindi ginagawa ng mga taong baon sa utang? That question led me to become a personal finance and investment literacy advocate. My passion and purpose is to help more Filipinos appreciate the value of saving their hard-earned money and consider investing to achieve their financial goals. What I love about our company is that we come to work every day to do something we love. Most especially us from the business development and market education team, we get to inspire people to upgrade their money management skills and create awareness of investment opportunities that are legitimate, affordable, and accessible. And here are some of my certifications to let you know that I can actually discuss what I'm going to talk to you this morning. We acknowledge that this is the current demographics of stock market investors in the Philippines as of 2021. So imagine, no, our country has over 100 million in population, but there's only 1.62 million stock market accounts. So that's around 1 to 2% are only investing in the stock market. Most of them at 1.15 million have online accounts. Around 80% are locally employed, but there has been gaining interest from OFW and even students like you. All right, so if I may ask you, how about you guys? Meron na ba kayong stock trading or any form of investment accounts already? So feel free to chat them in. Can you please chat yes or no if you have existing stock trading or investment accounts already? So let me look at the Q&A portion. Yeah. All right, now while you're typing that in, we can actually see here that majority are still from Metro Manila at 75.6%. But the rest of the country has yet to catch up. Even where I am based, I'm actually here in Davao City, sa Mindanao, we only represent 3.5%. So imagine that that's 3.5% of the 1 to 2% who invest in the stock market. All right, so let me see the chat box. If I just like to ask if there are already people here who have existing stock trading accounts. All right, so feel free. No, later we can come back to that later. Let me see. Ayan, so some people have already entered here. Some people said yes. Some students also said no. All right, so I think it's quite a good mix, no? But I think majority doesn't have a stock trading account yet. And that's okay, no? I think it reflects in the numbers that you see here in the screen. All right, congratulations for those who answered yes. You're actually part of the 1% of the students who invest in the stock market. So I encourage the others also to do the same, and you will see the advantages towards the presentation. And for those who answered no, actually that's the reason why we, the Business Development and Market Education team, conduct financial and investment literacy sessions to educate more Filipinos about the advantages and also the downside when it comes to investing in the stock market. Fortunately for us, we are regularly invited by private, public, and academic institutions such as Gardenia Philippines, Department of Trade and Industry, University of the Philippines, the Philippine Stock Exchange, the Global Filipino Investors, the Filipino Times, Randall Chongson's Investment Conference, the Bureau of the Treasury, and Embassy of the Philippines. We have also improved the overall webinar experience by gamifying our sessions through an online competition. So I hope when you follow the Facebook page of First Metro Sec, you'll be able to join us in our upcoming game night sessions. Now, sometimes we conduct trivia night sessions for us to learn and have fun at the same time. And actually later this afternoon, you'll actually also experience somewhat a gamified experience through Praxis. So I encourage everyone to join this afternoon's event. Now this brings us back to our webinar today, which is Trending D.I.Y. So again, that's digital investments for the youth. Actually, I consider yourself to be very lucky, kasi even at your young age, right now, in this day and age, investments has really become more accessible and affordable. When I started investing, it's not as as easy as it is right now. So for today, we're going to talk about the following. So first, ano ba yung mga legitimate investments? Second, ano yung mga characteristics of each of those legitimate investments? And third, of course, paano tayo kikita sa mga legitimate investments? And lastly, I think most importantly, when should we start to invest? If you have any question regarding the presentation, feel free to ask them in the Q&A in VFairs. All right, in the panel that you're seeing there right now, feel free to drop them there. Then I'll be able to answer that live in the Q&A portion after this presentation. All right. So first, let's discuss what are the 3 legitimate investment asset classes out there. So we have money market, fixed income or bonds, and equities or stocks. So as you go further to the right, the risk involved actually increases. So this means equities are riskier than your bonds, and bonds are riskier than your money market. If you're comfortable in taking on more risk, the potential return also increases. For time deposits and with a good amount of money, you can probably get around 1.25% interest rate per annum. For bonds, like the government's retail treasury bond 28, had a 5.75% interest rate over a 5.5-year maturity period. For equities, it's not like your money market and bonds that have fixed rates of returns. The performance of stocks fluctuates with investor sentiment, and this is governed by the supply and demand market forces. So there are years talaga that the stock market is positive, sometimes negative, or little to no change at all. But historically ending in 2021, the 20-year compound annual growth rate of the PSEI is around 9.45%. But as always, past performance is no guarantee of future results. Now let's recall, the most common reason why people invest is to beat inflation and grow their money. Last year, 2021, our average inflation was at 4.5%. Now, when we look at these returns in the graph, it seems like only bonds and stocks were able to beat inflation. So does this mean that we won't put any money in money market? I beg to differ. It's actually good to consider your risk appetite and potential returns, but we should also take into account the time horizon when it comes to investing. All right, as mentioned by Ms. Gaddis a while ago, we build our emergency fund to protect our finances from unexpected expenses or possible loss of primary income. We don't know when any of these things will happen, so it might not be wise to put it in stocks. Kasi again, the performance fluctuates. You might put yourself in a position where you have to sell your stocks even at a loss because you need the money already. That's why I have to emphasize it's very important to have an emergency fund before proceeding to investing in riskier assets. So for our short-term financial goals, it might be best to put it in money market instruments, which are low risk and liquid assets. Again, for our emergency fund, we are foregoing the higher potential returns for the protection and accessibility of our money. For our medium to long-term financial goals, we also need to build our growth fund, which can be a mix between bonds and stocks. To understand these investments further, let's try to discuss all the characteristics of each of these investments. So let's take it one by one. First are your money market securities. So the common instruments here are your treasury bills, time deposits, and savings accounts. You can earn from interest payments of your deposits over a certain maturity period. Now, if you're going to need the money over the short term, maybe something that's less than a year, it might be best to put it in money market instruments, again, because they are low risk and actually relatively liquid. Second type are your fixed income securities or bonds. So bonds are essentially utang or debt instruments. And there are two types. You have your government and corporate bonds. Now, in terms of risk, government bonds are perceived to have lower risk than corporate bonds since it is backed by the country. Of course, to compensate you to lending your money for a certain period of time, pwede kang kumita through coupon or interest payments. These are actually paid quarterly, semi-annually, or annually. Now, in terms of interest rates, corporate bonds usually have higher interest rates than government bonds. This is because of its higher potential default risk. the risk of a company to default is higher than what a country would also default. So in that regard, since you have higher risk when it comes to corporate bonds, they usually offer higher interest rates than your government bonds. Now, bonds are also traded in the secondary market, so investors can actually sell them before the maturity date. You don't have to wait for it to reach the maturity date. You can actually sell it. And in this case, you can earn for potential capital gains. Because there are some instances, let's say when the yields, when the bond yields are actually declining, all right? When the bond yields are declining, it has an inverse relationship with your bond prices. So if bond yields are decreasing, then your bond prices are actually increasing, and you can actually sell it for potential capital gains. Now, of course, you don't have to actively trade your bonds, because if you decide to hold it until the maturity date, the principal amount will be returned in full. So if you're investing for medium to long-term financial goals, maybe between 1 to 5 years, it might be best to invest it in bond instruments as they have higher interest rates than your money market securities. But again, they are not as liquid as they usually have longer maturity dates. Again, if your goal is something that's between 1 to 5 years that you want to achieve it, it might be best to put it in bond instruments because they have higher interest rates, all right, compared to your money market securities. But again, since you have a longer time horizon, they are not as liquid than your money market securities. For example, the recent retail treasury bond offering, that's RTB 28, has a 5.75% annual interest rate over a 5.5-year maturity period. So it's very affordable and accessible since the minimum investment is only 5,000 pesos. So if you have 5,000 pesos, you can already invest in retail treasury bonds. Interest payments are also paid quarterly, but since this is an interest income, it's also subject to 20% final withholding tax. Now let's say you invested 5,000 pesos in a time deposit, you will earn 247 pesos after 5.5 years. Now, on the other hand, let's try to compare it. Now, if we invest it in RTB 28, for the same amount of money, you will earn 1,265 pesos after 5.5 years. So from this example, you can clearly see that investing in RTB 28 can earn a relatively higher yield than time deposits. In this bond issuance, First Metrosec clients were able to invest during the primary offer period. And we hope that we will still be able to participate in the next RTB issuances, and our clients can actually do that through their First Metrosec account. There's currently no active RTB offering, but just to give you an idea how convenient it is to invest in RTB 28 using your First Metrosec account, I'll show you the 3 easy steps. So first, order RTBs online. Go to www.treasury.gov.ph and fill out the online form, and just choose First Metro Securities Brokerage Corp as your preferred settlement bank. Then after that, you need to pay through First Metrosec, and it will redirect you to the payment page of First Metrosec. You just need to enter your username and password, read the notice of offering, authorization, and investor's undertaking. Then after that, third and last step, you just need to confirm your RTB 28 order. So review lang the payment details, click confirm, and you're done. Then after that, you'll receive your notice of successful payment in your registered email address. Now, on the issue date, you'll be able to see your retail treasury bonds inside your First Metrosec investment portfolio. And here's a sample portfolio that shows you that it actually subscribed to RTB 25, 27, and 28. So you can see that as part of your portfolio, if you want to have a growth fund, which is a mix between your bonds and your stocks, you can conveniently invest in bonds through First Metrosec. All right. Now let's go to the third type. Let's talk about equity securities. These are shares of stock of a listed company, and as part owner of a business, you can actually share in the company's profits through dividends. These are not guaranteed though, as this depends on the decision of the board of directors. So essentially, companies na medyo generous sila when it comes to giving dividends, they tend to grow less quickly. But those who are less generous, they tend to grow more quickly because they're able to reinvest some of their net profit back to the business to grow it further. Stocks are also publicly traded in the Philippine Stock Exchange. So similar to bonds, investors can also sell it to earn from potential price appreciation. Yet again, this is governed by supply and demand, so it can also go the other way. And this is what we call your market risk. Now, if you're investing for your long-term financial goals, maybe something that's more than 5 years, you might consider investing it in stocks, but with prudence, because the potential earnings in stocks are relatively higher for a longer time horizon compared to your bonds and to your money market securities. There are actually hundreds of publicly listed companies in the local stock market to choose from, and here are their types. So first, we have here preferred stocks. So they pay fixed dividends relative to the issue price. And dividend yields are usually higher than what you get from your common stocks, which we will talk about in the next slide. And these are also traded in the secondary market, so you can actually also earn from potential price appreciation. So let's pick one as an example here. We have Ayala Corporation's Class B Series 23 preferred stocks. It has a ticker symbol APB2R. So you can see that there. It's the first row. Its issue price is 500 pesos with a dividend rate of 4.82%. And as of October 28, 2022, it closed at 499 pesos. So let's say you buy it at this market price, the gross dividend yield up to the next optional call date will be around 4.92%. And you can see that there in the graph. And you can do the similar analysis for the following examples. Second, we have also here common stocks. So unlike your preferred stocks that pay fixed dividends, the dividends from common stocks varies and depends on the company's profitability and declaration of the board of directors. So let's have one example. We have here Globe Telecom Inc. So it closed at 2,292 pesos as of November 10, 2022. Now in the last 12 months, it actually gave 108 pesos dividends per share. Now let's say the company will give the same level of dividends in the next 12 months and you bought it at 2,292 pesos, your expected dividend yield will be around 4.71%. And you can also see there the payment frequency. So some companies pay quarterly, semi-annually, some also give annually. But please note, some companies do not give dividends. Likely these companies are growth companies because they'd rather reinvest back their net profits back to the business to grow it further, and rather than giving it back to their investors in the form of dividends. But if you're looking for long-term gains, common stocks have the biggest potential. And I think Ms. Cadiz was also able to discuss this a while ago. Now let's go to the third type. Now we actually have something, we have new kid in the block. Now we call this your real estate investment trust. Let's start by first understanding what are REIT companies or real estate investment trust companies. So REIT companies are actually duly registered by the SEC, the Securities and Exchange Commission, and they are publicly listed and traded on the Philippine Stock Exchange. REITs basically exist to own revenue-generating real estate assets, so they can be office spaces, commercial centers, hotels and resorts, and even energy-producing projects. Through the REIT company's fund and property managers, the REIT company collects revenues and is required by REIT law to distribute 90% of its annual distributable income to its shareholders. Again, they are required by law to distribute 90%, at least 90% of its distributable income back to its shareholders. And because of this unique feature, REITs can be a good source of a passive dividend income for your diversified investment portfolio. So if you want some allocation of your portfolio that gives passive dividend income, REITs can be a good source. And even your preferred shares can also be a good choice. Now let's look at an example. We have here MREIT Inc. Okay, so it IPO'd at 16.1 pesos and has a full year 2023 effective yield of around 8.76%. All right. So for common shareholders of REIT companies, this means that there's actually opportunity for you to earn via stream of dividends and capital appreciation. Over time, a REIT company's dividends per share can also grow, including its share price. And one of the most common reasons here is if in the future, they would add more revenue generating real estate assets into their portfolio. And of course, no, if they're part of their lease contract with their renters, if they want to include there a rent escalation stipulation, they can actually put that in your lease contract. And of course, that could also hedge against your inflation. Thus, in REITs, investors have an attractive income-generating security with long-term growth potential. So we'll have another example here. We have a REIT Inc. I think it's in the top row. Market price as of October 28 is 31 pesos. So if it will hit our research team's fundamental target price of 48 pesos, that will be more than 50% potential upside. So again, our research team is thinking that its target price, based from their analysis, is around 48 pesos. So from October 28, 31 pesos, that's a very big potential upside. We actually have a couple of hundred stocks to choose from, but in order to get the general sentiment or the barometer of the local market, the Philippine Stock Exchange, which is our host for the day, periodically selects 30 stocks to be part of the composite index. This is like a barometer or a benchmark sa Philippine stock market's performance. And these are the components of the index right now. Now, of course, PSE conducts a semi-annual review to review the components of the index, and based on their respective liquidity, free float levels, full market capitalization, among others, based on this, they can actually decide whether to increase or decrease the individual weights. By the way, there are 30 stocks in the index, but these are not equal weights. Like they have equal weights, it depends. Some stocks are heavier than the other stocks. They have heavier exposure. And one of the major factors that would affect that is actually your market capitalization. And of course, PSE could also decide to delete or add stocks to the index. And I'm going to show you the recent update. So actually, recently, SecB was actually taken out of the index and was replaced by SCC. So again, the PSE can do that based on their metrics. Now, in our quest to find opportunities to earn in stocks, unfortunately, we have a lot of responsibilities in life. Even as students, we have lots of homework, we have lots of things that we need to submit to our professors. Now, amidst all that, our responsibilities in life, how can First Metrosec help? Now, our research team regularly publishes report in our platform that caters to different kinds of investors. And the good thing about this is all are available 24/7 and for free to all First Metrosec clients. All of our research reports are available to all our clients. So whether you're a big client or a small client or just a starting investor, doesn't matter. You have access to all the trade ideas generated by our research team. If you're a long-term investor and individually pick stocks using the top-down approach, you will love our company research report. Now, this report tells you what's new, the outlook, recommendation, and fundamental target price in the next 12 months for that stock. So in this example, you can see a snippet of our company research report on the Philippine Stock Exchange Index. We have buy calls on 9 blue chip stocks with their respective fundamental target prices you can see there at the right side of the table. And fortunately, there are also individual reports published for each of these stock picks, which are actually within the coverage of First Metrosec Research. And all of these are accessible via our platform. So if you're long-term investors, this can be a very good research report for you. Now we acknowledge that other firms might also have a different view. Of course, the calls and estimates for similar stocks might be different for different brokers. Now, if they tend to be optimistic on that stocks, then their assumptions will also be very positive. And if that is so, the target prices will be, in general, higher than consensus. However, if they are conservative, their target price will consequently be lower. Now what if we have this disparity in the market? I think our best estimate here will be the average or the consensus view. Now, this is the strength of our consensus research report because you can check the dividend yield, consensus target price, and rating for the PSEI and select non-index stocks. So you can literally see there the specific stock. Of course, the way for us to earn in the stock market is through price appreciation and dividend yield. So you can also see there the common a column on dividend yield and also a column for the potential profit or loss depending on the consensus target price. All right, and you can see there the respective profit or loss levels. All right, so let's look at an example. So let's look at SM. Based on its closing price last October 21, that's at 770 pesos, SM's trailing 12 months dividend yield is around 0.81%. So its consensus target price is around 1,083 pesos. So your potential profit here, based on the current market price and your consensus target price, is around 40.65%. And I think with this consensus quarter research report, it will be easier for you to filter stocks that you'd like to invest in. By the way, guys, now if you have any questions regarding my presentations, feel free to queue them in the Q&A panel of BFairs. All right, so we can answer them after my presentation. Now next, I'd also like to highlight our stock screen research report. So this has model portfolios designed to meet different investment styles. So if you're the type of person who likes to ride the momentum, if you like to invest in value plays, or if you're the income investors that like to invest only in yield-seeking stocks or mga unloved na mga stocks. So they are selected from 50 most actively traded stocks listed on the PSE. And the methodology of screening the stocks is very quantitative. No, it's even described at the back of the report. So you can actually understand the specific fundamental valuations used and have been met, that it was actually included in the stock screen research report. And this is published every Wednesday, and you can access them on your First MetroSec account. Now, if you're an active trader, you will find our Traders Playbook Research Report very valuable. And I love this report. So first, the report shares what recently happened to the stock, either in the fundamental or technical perspective. Next, the analyst will explain the news or event and how it can potentially affect the stock price. Lastly, you will find the recommendation with specific conditions, take profit levels, and cut loss points. And I think if you're an active trader, those are your bare minimums. All right, if you're an active trader, you really need to know where you can enter. Now, once you have a position, in case it goes high, then you can know where to take profit. But of course, we always protect our downside. We need to minimize our risk. So we need to set our cut loss level. And that's actually indicated also in the report. So again, when it comes to short-term trading, you really have to accept that you will take a loss. I think it's part of your trading plan. You need to accept that you will need to take a loss. But when you take a loss, you need to make sure that you minimize it. All right. Now, when you minimize it, you can actually increase your profits if you can also maximize your profit levels. So again, that's how you make net profit when it comes to short-term trading. Now, amidst all of this discussion, what if you're not yet confident in picking stocks, but you're confident in the Philippine stock market that it will continue to grow over the long term? Of course, all of us here have a busy lifestyle, and of course, with all the things that we need to submit to our universities, to our colleges, likely we have little to no time to monitor our stock portfolio. Now, if you can tolerate short-term fluctuations, and you might consider to just track the performance of the PSEI by investing regularly. Instead of buying each of the 30 PSEI stocks and monitoring them individually, you can simply buy the First Metro Philippine Equity Exchange Traded Fund, or FM ETF. So essentially, FM ETF is a mutual fund that tracks the performance of the PSEI. And you can clearly see that in the chart below. The blue line, that's the actual performance of the Philippine Stock Index, while the red or maroon line is the performance of FM ETF. And you can clearly see here that it actually has done its job of mirroring the performance of the index. You can clearly see the similarity of both graphs. Now, as of November 10, 2022, it was trading at around 95 pesos per share. So you only need around 1,000 pesos to start investing in FM ETF. And I think even as students, no, 1,000 pesos is not that hard to achieve. Now imagine with that 1,000 pesos, again, not imagine, with that 1,000 pesos, you're already exposed to the top 30 stocks. All right, you don't need to buy the 30 stocks to get the overall performance of the market. You just need to buy FM ETF. And it's very affordable, and it's very easy to buy that FM ETF. So again, I think especially for students, now if you're just starting out in the market, this can be a good opportunity for you to be exposed without taking on necessary risk of individual stock picking. All right. So for your consideration, you might consider to look into FM ETF. Now, how do we actually buy FM ETF or any stock in the future? So you can actually trade ETF anytime, anywhere using an online trading platform such as First MetroSec. And here's how you can buy your first FM ETF shares. I just want to give you a walkthrough. No, I want you to imagine how nice it is to buy stocks. No? Now, let's say you have an account with First Metrosec. Simply log in and navigate to the trade tab and go to the new order. Then toggle the radio button to click the buy. Second, enter the stock code. In this case, the stock code is FMETF. You can actually use any stock that you'd like to buy here. Then third, indicate your preferred price. So in this case, when you look at the bid and ask volume, the best ask price there is 111 pesos. Fourth, indicate your desired volume. So when you look at the ask of 111 pesos, there are actually 240 shares they're willing to be sold at 111 pesos. So for this example, let's use 100 stocks. Let's say we're going to buy 100 stocks of FMETF. Now, the total value for this trade and the breakdown of the charges can be seen here on the right side. You can see there the total value and the charge breakdown. So here's also the table of the charges of each of the buy and sell transaction using the First Metrosec platform. So that's our service. So every time you buy or every time you sell, that's how we actually earn our money. But it's very, cheap, no? That's 0.25%. And I think that's one of the lowest, no? One of the lowest in the market. Now, thereafter, you can simply click the buy button, review your order details, and confirm by entering your password. However, we usually face these hurdles and challenges when we are about to invest. So first hurdle is actually time, no? We live in a very fast-paced society, no? I know as students, no, we don't have the time, no, because we're very busy with our studies, but we want to invest. Sometimes we also lack the confidence, no? Kasi nga kakasimula pa lang natin, no? We're still trying to learn more about investing. So parang di pa tayo confident to actually invest on our own. And of course, third common hurdle to start is actually the available investable funds. I understand as students, we don't have that much money, no? Usually the money we receive from our parents just covers what our daily needs are. Now, of course, that's one also the challenges. It's not quite affordable to invest. So here's my proposition for you. You can actually save yourself time, effort, and money by allowing professionals do what they do best through investment funds. And here's how investment funds work. So money from various investors are pulled together to make up baskets of cash, bonds, stocks, and combination of all. So essentially, now when you are diversified, you reduce your risk exposure because with your 1,000 pesos, or let's say how much is your initial investment, you're instantly diversified. And the buying and selling, like what I've shown you before, that is actually will be done by the expert fund manager for that fund. And there are also many funds out there that you can start investing even for as low as 1,000 pesos only. Now, as the value of the underlying securities increases, so does the value of your investment. And you can conveniently access them through FundSmart, your one-stop shop for the country's best performing investment funds in the First Metro Securities platform. Now, we carry mutual funds from our sister company, First Metro Asset Management, and also other companies such as ALFM, Atram, PhilEquity, Sun Life Asset Management, and even UITFs from Manulife Investment Management. And I'm also going to show you how you can conveniently do that. Now, simply just log into your First Metrosec account. Then you just need to click on Funds on the upper right-hand corner. Then this will redirect you to FundSmart's homepage. Now, you can scan there the different mutual funds or UITFs available. So let's say you did your research, and after your research, you got the attention of First Metro Save and Learn Focused Dynamic Fund. So of course, we want to research on this further. Then you just simply click on it, and it will redirect you to the fund portfolio, or in this case, the fund profile. So the fund profile page helps you understand a specific fund better. So you can view here the risk rating, fund type, minimum and initial investment, minimum holding period, net asset value per share, performance chart, top holdings, and fund allocation. So you can do a lot of research here because this is the main purpose of it, for you to know more about that fund. Now, let's say you decide to invest in this fund. So simply subscribe by clicking the subscribe button here in the top right. Then this will redirect you to the instruction page. So simply enter your instruction details by indicating your fund code, the amount you'd like to invest, then click subscribe. Then you confirm your instruction by inputting your password, then click confirm. So that's it. No? In just 2 easy steps, you were able to subscribe and invest already in the fund that you like. Now, the best part of investing in investment funds through First Metrosec is that you can make the most out of your hard-earned money. So because when you invest via traditional channels, they usually charge up to 2% sales load. However, when you invest through FundSmart, we actually have a zero sales charge feature, and makakatipid talaga kayo, especially if you're going to do this regularly over a long time horizon. All right. Now, if you're inclined to invest over the long term, there's a simple strategy that is actually easy to implement, and we call this your peso cost averaging. So all you need to do is just to invest a fixed amount at regular intervals, regardless of the market trend. So you can do this either twice or once a month, as long as it is on a consistent basis. Now let's try to put that into action. No? So we have here two young professionals. We have Paul and Mark who want to prepare for their retirement 30 years from now. So as you can see, si Paul, he started early. No? He started today, while Mark decided to do it 10 years later. So since Paul was still a student, no, kakasimula niya pa lang, pero sabi niya, even as a student, I would like to start investing already. But based on his circumstances, he can only afford to invest around 1,500 pesos per month. After 10 years, si Mark, meron na siyang trabaho, na-promote na siya, receive salary increases. He decided to double what Paul wanted to invest. So he decided to invest 3,000 pesos per month. They both decided to invest in FMETF or First Metro Philippine Equity Exchange Traded Fund. So si Mark, 3,000 pesos siya per month, so he was able to accumulate 720,000 pesos. Si Paul naman, he was only able to contribute a total of 540,000 pesos. But upon reaching retirement, assuming a 8% compound annual growth rate, ang projected portfolio value ni Mark will be around 1.7 million pesos. Not bad because he was still able to make his money work from him. From 720,000, naging 1.7 million. On the other hand naman, si Paul, yung projected portfolio value niya is around 2.1 million. And of course, all of us would agree that the returns of Paul was better than that of Mark. Now, when you come to think about this, parang counterintuitive siya, no? Kasi bakit naman mas malaki yung kay Paul compared kay Mark? Si Mark naman, mas malaki naman yung ininvest niya. Alright? Pare-parehas din naman yung pinag-investan nila. Now, the only difference between the two is the time that they started to invest. Because when it comes to investing, time is really good. It's okay to start small as long as you start as early as possible. So wag po natin maliitin yung konting pera natin ngayon, even as students pa lang, because one of the assets that you have that other people don't have is actually time. And when it comes to investing, time is really good. Time is really your friend. And that's the asset that you have right now. So wag niyo maliitin whatever you can invest right now. So in summary, we learned about the legitimate investment asset classes. So we have money market, fixed income or bonds, and equities or stocks. We also learned the characteristics of each asset and how we can potentially earn from them. So essentially, we can earn from interest payments, capital gains, and dividends. I was also able to show you how you can conveniently invest in bonds, stocks, and investment funds using your First Metrosec account. Lastly, we saw the advantage of investing regularly and as early as possible. So again, no, I'd like to just take this opportunity to encourage you, to inspire you students to really start as early as possible. Kasi ako, I started really late. I started investing at the age of 25 already. So every time I have an opportunity to pay it forward to the next generation, because I want you students to become better money managers than us and better investors than our generation. So again, I'd like to thank you for listening to my presentation. And I hope this would encourage you to start as early as possible. No? Kasi again, that's the asset that many of us don't have. Okay? So wag niyo maliitin whatever you can invest right now kasi that will really compound over time.